Good morning, guys. Welcome to the show. I'm glad to have you guys here now. Today is Tuesday, February 26, 2019. And the first thing I want to talk about here is oil. But in order to do that, we're going to have to get the charts open right here. Okay, let's get started. Let's talk about oil. There's something going on here. There's oil tankers right now in several different oceans. And these oil tankers are going empty. They're only carrying oil, I guess, in one direction. Empty super tankers speak volumes about the oil market. As the United States battles with OPEC, rivals over the direction of global oil prices, and Trump wants to keep oil prices subdued, Saudi Arabia and Russia are reeling from years of prices too low to balance their budgets and are desperately hoping to push them higher with another round of production cuts. And 12 supertankers right now are sailing across the Atlantic empty, with just enough, I guess they're putting bilge water in their pumps into their tanks, just enough. Here's a picture, 12 of them right here. It looks like there's about 3 of them just off the coast in the Gulf of Mexico, just off the coast of Texas. Of course, that's where an awful lot of crude production is. It looks like another one is sailing through the strait between Cuba and the Yucatan Peninsula. There's several off the coast of Brazil. There's 2 of them out here in the southern Atlantic, and there's 3 of them down here in the Indian Ocean. So these are empty super tankers, folks, you know. Now, here's something that a lot of people don't understand about the oil market and why oil prices are staying down. One thing is the world has a set supply of crude that it uses every day. And if the oil production is a little bit higher than that set supply that people are using every day, the price of oil will fall drastically. And if the oil production is less than what the people use every day, the oil price will climb drastically. So we have a very, very sensitive market. OPEC has been controlling the oil-producing nations that are working together. OPEC has been controlling the oil price for many years. They're very good at controlling the oil price, but there's been low oil prices, and they'd like to get the oil prices higher. And this is the reason why these tankers are going empty right now. This is all about this. Now, we're going to move to a different story entirely right now. We're going to move to the Brexit, you know, and Theresa May, and there's a huge problem here. The Great Britain right now is in bedlam. They don't know what to do, and they don't know what's going to happen. A lot of people are frightened. People are stockpiling food. They're frightened that 40% of the food for England comes from the European Union, you know, and they're scared that the food supply lines are going to be cut off. They're just frightened overall what's going to happen when Brexit hits on the 29th of March. And, of course, Theresa May now has made this huge delay into another vote on her deal, you know. They're trying to push that deal through. And the whole thing's up in the air right now, but the deadline is approaching. And if they go over that deadline with no other answer in place, with nothing else, then a hard Brexit will happen at that point. So we don't really see anything yet that's going to lead us away from a hard Brexit. I say yet because they're working on it. Believe me, these politicians are working on something, anything, rather than a hard Brexit. And so we're going to have to wait and see what happens on this situation. But now let's move into the markets. And let's first take a look at the silver price. We're looking at, it's down 11 cents on the day, you know. And it's falling, a falling silver price. We got $15.75. It's fell down below its range right now. That's not a good thing. Let's take a look at gold. Gold's fell down too. Gold's at $13.23 and falling. $3.80 down on the day. And gold too has fell below its range. The range it was holding. That's not good. You know, it's very bearish what's happening right now with gold and silver. Let's take a look at the cryptocurrency markets. And what we see is we see that precipitous fall we had, and now it's stabilized, and it's just going along at around 3750, 3800, long in there. It's bouncing along today, ever since that big fall we had yesterday. So we got a price of $3,790.57 right now, right this minute. Now let's take a look at cryptocurrency market capitalizations. $130 billion market cap, 52% Bitcoin dominance, and we're seeing that swoop in the markets. It fell and then it stabilized off. Some of the coins are bouncing back. XRP is one of the coins that's bouncing back. Ripple, it's back up to almost 32 cents. It's up 4.99% on the day. Litecoin is up 1% on the day. It's at $45.63. Now we're going to take a look at the pre-market for the Dow Jones, and the pre-market is down 86 points. Okay, now the regular market's not going to open up for another couple more hours, you know. I'm getting this report done a little bit early today, but our pre-market is down 86 points. Now let's take a look at the oil price, you know. The oil price was down to $43.93 on December 24th, and now what's happened is it's been slowly increasing. OPEC is really putting a stranglehold on the oil market, and even with the increased production in the United States, still, look at those empty super tankers like I pointed out before. And so we got a very slowly rising oil price, you know. That's because they're limiting production. Now let's take a look here at, oh, that's our Brexit story. That was our oil story. Yeah, bonds and rates. That's what we want to look at, the bonds. Bond yields today. Across the board, we're looking at falling bond yields. There's irregularities in the bond market. We're having things that are unusual happen in the bond market. Let's take a look at the 10-year here real quick. And we're going to do a long-term chart on the 10-year. And we're going to take it out to 5 years here. It's a 5-year chart. And what we can see is let me get to pull down here a little bit. Excuse me. We can see in July of 2016, that was a big turn in the bond market. And we see what's happened is it went up really fast, and we reached a peak around July of the following, not July, but in 2017 it went up really fast, and then it fell back off again. So by the latter part of 2017, we had a falling yields in the bond market. But what I want to point out is the overall picture. Ever since July of 2016 till now, the overall picture is that bond yields have been rising. Simply put, that's the overall picture. And it's that overall picture that's important. Now what's happened is bond yields have leveled out. They fell off. They were up to almost 3.25% on the 10-year. They fell off now, but they've leveled out. I think that my personal opinion is that we're coming up to where they're going to pop up again. They're going to go back up again. Bond yields are going to rise because I think this overall trend line, starting in July of 2016, is going to continue, this overall upward trend. And so that means, because they have an inverse relationship, bonds, this means that what we're actually witnessing here is a collapsing bond market. That when bond yields rise, it's not like the other market. Normally when something rises, you've got a rising market. In this case, bond yield market is falling when it's rising. And so it's been rising ever since 2016 till now. And so what we're seeing is rising yields. We're seeing, and with bonds, there's another thing involved here that you have to consider. If you have a bond, say a 10-year bond, and it only goes up a fraction of a percentage, it has a much greater impact on what that bond is actually worth than the small percentage that rises in the yield. So your bond, if you buy in, say at 2.65%, and say the yield goes up to 4%, you know, that bond now, that 2.65% bond is not going to be worth near as much as it was worth when you purchased it at 2.65% if the yields rise to 4%. You're going to lose money on that bond. Okay? That's the way it works. You're going to lose a lot of money on that bond. If you buy in at 2.65% on a 10-year bond and you wait until the bond yields rise to even 5%, you're going to lose a lot of money on that bond, and that's the way it works. So a rising bond market is actually a falling bond market. I know that's very confusing, but this bond market has been falling going all the way back to July of 2016, and it's a continuous trend line where bond yields have been rising. Sure, we've had a little fall off here. It was up to 3.25 on the 10-year, and now it's fell back to 2.65. But that's actually just a little bounce in the overall trend, you know. Anyway, figured I'd point that out. Here, well, we're looking at the U.S. dollar index, okay? And the U.S. dollar index is 96.34 today, and it's been staying in that range around 96.5, more or less, you know, for quite a long time. So it's a little bit boring looking at the U.S. dollar index right now. Listen, thank you guys for listening to this market report. I'm going to try to get a show out this afternoon on some of the situations that are happening. And thanks for listening. I appreciate you guys, my audience. Bye-bye for now.